you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. We had a change in our lineup today. We were supposed to be having the writer Ken come on to the show, but we had a little bit of a short notice switch up. So, nevertheless, the show will go on because, we've got episodes for days on deck. So, today we're going to get back to the original topic we were going to be talking about, which was how to get that money. Uh, Make sure that you guys like and subscribe, as you see in the comment section. You can click that link if you want to get on while the show is live. Approve the mic, approve the camera, and if you're over the age of 18, we bring you up onto the show. Then you can say what you got to say about the topic, ask questions, give shout outs to friends and family as long as it's appropriate. So I strongly encourage for it to be appropriate. When you have the mentality that I'm going to bomb this podcast, you're going to bomb the podcast in an appropriate fashion. That's why I said it like 5 times. In the meantime, today we're going to be talking about how you can turn $200 into a lifetime change in wealth. So I want you guys to join me in it. Just entertain me, if you will, as we go into all of the ways that we could potentially bring a $200 investment into a lifetime of capital. But you have to also understand that while we're making it work with putting that extra effort into investing in stock marketing and everything, we have to understand that we also have to figure out where we're going to get the extra money from to turn ourselves into multimillionaires and what we're going to do about it. So imagine waking up every morning with the confidence that you're one step closer to financial freedom. It's a feeling that's hard to put into words, but I know it's something that many of you aspire to. And today I wanted to show you that it's possible to turn small amounts of money into life-changing wealth. And many of us face similar challenges when it comes to growing our wealth. For one, there's a limited quantity of funds, and that tends to be a problem. We might not have a lot of money to invest, and the thought of parting with a little has a lot more of a daunting feeling than most people would realize. Then there's the lack of investment knowledge, and we might not know where to start or what the investment options are that are available to us. And even if we did, we might not understand the risk involved or how to mitigate them. Another challenge is the fear of losing it all. We've all heard the horror stories of people who's invested in the wrong stock or companies and lost everything. They've even invested in the right stock at the wrong time and lost everything. For example, those individuals that are throwing it down while the stock market is up at 90,000 in Q4 on Bitcoin. You got to understand that in Q1 and Q2, it will start depreciating, and it will be at its lowest point in Q2. So if you invested in Bitcoin at the Q4, you're at its all-time record high, which means that once it starts depreciating, and it typically depreciates by about 40 or 50%, then you're losing out on 100% of your investment. But even though it was a smart move for those individuals who did buy into it in August, September, and even those who kind of put it down right when it was at 60,000, right after Halloween, right before everything blew up. Actually, I think it was right before Halloween. When they put it down, they ended up from 60 to 90,000, a $30,000 increase. And right after that, it's going to go back down. Once you get that $30,000 to $40,000 increase, you kind of want to bow out and try not to be greedy. But those individuals that's going to ride the wave, every wave levels out, and then whatever you didn't get while the wave was at its highest, you're not going to have now because everything's leveled out. So if you don't pull out at the right time, even if you do have a bull market when you dive in, when it's on a massive rise, record high rise, if you don't pull out at the right time, you could lose it all. So a $30,000 increase on a Bitcoin If you had 10% invested into it, that 10% investment might have gained a 30% increase, depending upon how much you put in there versus what the stock was at the time. But when you think about from 60 to 90, it had a 50% increase, which means that if you would have had $1,000 in there, you would have gained $500 at that time. But if you left it in there until March, it's not going to be that. And if in the event that the market doesn't continue to rise in the upcoming years to those higher levels, you would have to be more of a buy and hold with Bitcoin and getting residual percentages, as opposed to the marginal traders that are going to like put their money up and they're going to flip it on a daily basis, where they're making 80% returns. You could potentially still make a base of like 5 or 10% per year on Bitcoin if you just bought it and held the stock value, because there is an option with Bitcoin. If you put up a certain quantity of money as a base holder of the money and you're leaving it in there for leaving it in there and not trading it for an extended period of time, they do give you percentages, but it's not nearly as much of a percentage as you would get if you were fractional trading. So these types of fears can paralyze and cause you to hesitate or even give up on the financial goals altogether. And you also have the intimidation factors. So investing can seem like a complex and confusing world, full of jargon and technical terms that can be overwhelming. And I can tell you, when you're doing option trading, there is a lot of jargon to learn. It took me weeks to understand some of the most simplistic areas of it. But what if I told you that it doesn't have to be this way? What if you could start investing with a little as $200 and potentially turn into a life-changing wealth? It's not a gimmick or a get-rich-quick scheme. It's a reality that within a reach of those that are willing to apply themselves, you would actually be able to achieve. So what are some investment strategies that you can use to turn $200 into a life-changing wealth? Keep in mind, I'm not asking you to buy a thing. I'm just letting you know that it's out there. One option is to invest in stocks. But when you go and invest in stocks, you got to pay attention to what you're investing in, because you can start with a small amount of money and invest in individual stocks. And individual stocks are different from contract stocks, because contract stocks are bundled stocks where it might be like $10 or $15 per share, but it is a 100 share package. That is a contract option. You don't want to buy 100 shares in package. You can start with a small amount and buy stocks one stock at a time. Different platforms, you can go through like a brokerage firm that could allow you to say, if you only have $200 and you're looking at that $200 Tesla stock, and you wanted to reap the rewards off of something like that, you could just go and buy one share instead of going and buying 100 shares in a contract. Another option is investing in ETFs, or exchange trade funds. These are baskets of stocks or other securities that track a particular market index, providing diversification and reducing risk. Usually you start seeing ETFs in certain trading platforms like Stash, where you go in there, you put your money up into the app, you buy certain stock bundles like technology, education, bills, whatever, utilities, and it'll just tell you that that particular bundle of stocks either had an overall rise or an overall fall. And depending on the rise or the fall, you get the percentage if you cash out. You can also consider investing in real estate. And when you're dealing with real estate investments like real estate trusts or REITs, which are real estate investment trusts that allow you to invest in real estate without directly owning physical properties, that's another way that you can make you a little bit of money. Now, my buddy is doing a REIT because I've told you before that he invested into this app that they have real estate apps out there now where you can buy into a REIT where you just give them money, and for a certain period of time, they will hold your money, and as they hold your money, you gain a certain quantity of percentage. The one that my buddy is utilizing is a 20% interest rate. Uh, you also have to understand that with the 20% interest rate, he still has to deal with uh, a 6% penalty to get his money back. And that's one of the things that I had to stop. I had to pause and think about for a second, because if I'm giving you my money, you're going to use my money to make money for you, but then you're going to charge me a service fee for me to get my money back. I understand it's a cost of doing business, but for Christ's sake, you're offering me an enticing 20%, which is above market average. And real estate is usually 6 to 12%. And you can get 20% on a deal, but you're looking at 20% on a deal before you pay all the investors. So you're probably going to walk away with like 10%, sometimes less than that. Sometimes you walk away with $20,000, even if it's $1 million deal. But the fact is that, you're looking at a 20% guaranteed return on an annual basis for your financial investment. And then they're going to charge you, like this particular one that my buddy is using, is going to charge a 6% withdrawal fee, so transaction fee for him to withdraw. Now, if he's withdrawing just his interest, then yeah, his 6% isn't that much. But if he was to withdraw the entire, like the enticement was put up $2,500, because they said put up the $250 a month for 12 months, right? And 10 months is $2,500. So you're looking at putting up $3,000 in a year. After you put up the $3,000 for a year, you'll get back a 20% return, which means that you should get back about $600 off of your $3,600. But if you withdraw all of the money, they're going to charge you 6%. Now, there is a little clause in there that the money has to stay in there for approximately 12 consecutive months before withdrawal from the time the money was uploaded. But now you have fractional percentages of still being penalized, because if you put up money last month, this will be your 13th installment. If you decide to withdraw the $600 interest off of the previous amount of money, then they're still going to get the opportunity to penalize you as if you withdrew the money that you just put up. So they would hit you for 6% of the 250. They may even hit you for 6% of the whole 600, because they could assume that the money that you withdrew was this month's installment and last month's installment. So the wording of it is very tricky. But if you put your money in there, leave it in there, don't touch it, don't add anything else to it for 12 full months, and then go back and look at that stock and say, hey, give me my money, then yeah, you should be able to, on the 13th month, withdraw 100% of your money back without having to pay the 6% interest fee. But based on the verbiage, if you're putting in money every month, you're going to pay 6% to withdraw your money. So say you want to take it all out. Well, if you put up 3,000 and you got 3,600, and now you're going to pay 6% on $3,600. The whole $600 interest is gone. You know what I'm saying? So it doesn't. There you go again. What's going on, buddy? What's going on? So these are one of the things that we talk about when we say you got to be careful with the verbiage. But one of the other things that's good to get into is when you're dealing with the exchange trade funds with ETFs, is consider investing in low ETFs that track major indices like the S&P 500s. So you want something like this that allows for diversification with minimal investment. You good? I'm all right. I'm all right. I was going over it with a lot of the fans about the how to put up $200 and invest in certain areas. And start building it over time, because as we've been talking about for the past month, if you put your money into anything, and it's crazy because we spend $200-300 at the club when we're going out. We spend a couple $100 on a girl on a date, as fellas, because women don't pay for men. And the fact is that something as little as $200 you could take and invest it. And every time you have extra $200 to waste on entertainment, you can invest that $200. And if you did that, you would be in a position where you could potentially build way more wealth over time, where you would have enough money to go to those Diddy parties. And you'd be living a life of rally and you wouldn't have to work. But it's a struggle. It's a struggle to get in there and try to see how do you start investing. So when I was giving you guys tips and tricks on how to invest before, those tips and tricks on how you guys can invest before was ways that you could put your money in areas where you can access it, because usually the bottom 99% of Americans actually live dollar to dollar, check to check, and they waste every penny that they get in excess of their bills on entertainment, or shopping, which is a form of entertainment, luxury items, which is a form of entertainment, greed and gluttony, expensive dinners when they could be doing practical meals. And all of this leads to the fact that they don't have any extra money. You have to go back to work for somebody else to make them a millionaire, multimillionaire, and you're still living from check to check. And typically, what a lot of people do is after a while, they will tag in and get a raise or a promotion. And now they're making more money. And what they'll do is, because they have more money, they will get more debt. And it's crazy that instead of reducing your debt, reducing your monthly expenses, and taking the extra money and putting it somewhere else where you could have capital gains, they're actually keeping the money in a revolving fashion where it comes in and it goes right back out, and they're waiting on their next paycheck to put gas in their car. So today I was talking about how it's a good way for us to jump in and start working with our investments. Something as little as $200 could go a long way. And while we were talking about how you could put it in a certain area where it's not going to be an overnight scenario. And that's one of the reasons why it's a surefire thing to do. Because if I told you that you could take $200 and make yourself a millionaire tomorrow, or make yourself a millionaire inside of 30 days, or, draw back a $50,000 a year income inside of 3 months, that'd be a bold-faced lie. Like, you would have to be one of the lucky, excuse me, you'd have to be one of the lucky ones that struck the iron while it was hot and got the results that nobody else could get. And that's not something that 99% of Americans is going to be able to do, because if that was the case, one, you can't hit big if you don't have a large quantity of failure in that investment where one person was successful, because that person bet against everybody else. Just like at the gambling at the horse races and whatnot. In order for the odds to be 10 to 1, 20 to 1, 50 to 1, 50 extra people had to vote against you. And then when you turn out to be right, which is the same as with stock options, when you bet against the market with covered calls or uncovered calls, and covered puts or uncovered puts, when you're betting and saying, well, the market's not going to go this low, but if it does, I'll cover it. If you're right, you get to keep the premium, and you don't have to buy anything. If you put up a uncovered put, you don't have to sell anything if you put up an uncovered call. But if you were wrong, you sold your stock if it was a covered call, and you bought a stock if it was a covered put. You just gotta take the hits where they land. But the fact is that if your goal is to put money on puts that would have you buy a stock that you would have bought anyway, and you're underbidding on the stock, it's a win-win for you, because now you got a stock. The stock should go up in value eventually if you're watching that stock. Likewise, with a stock that you're going to sell, if you're watching the market on it, and when you put the covered put on there, the stock is not going to meet that value, then by the time it the lapse on that contract happens, you would have received the entire premium and you'd be good to go, but you still got your stock. And if you continuously put the covered put up there, you would be able to, as long as the market is not in favor of the covered put, you would continue to get premiums off of that covered put, which means that you would continue to make money off of holding that stock, minus the transaction fee. But you have to know what you're doing. And if you know what you're doing, then you're good to go. It's a big learning curve, but the more you practice at it, the more you get good at it, and the more you get good at it, the more you can invest in it and make money for you. But you're not going to make money for you if you are not putting it where it needs to be at on a regular basis. If you put it up there, you're going to invest in the stock, and then all of a sudden you want to go do something fun with a friend, and now you're pulling it back out. You're not helping yourself. Likewise, if you're trying to invest in a stock and somebody else has an emergency, and now you're pulling money out of your pocket to go bail somebody else out of a bad spot or bail somebody else out of jail, you're hurting your own portfolio, and that's not the way to make yourself successful. You want to be able to take care of your family and friends and the people that matter to you, but you want to be able to take care of yourself so that you have extra revenue so that you can take care of your family and friends. Because if you spread yourself too thin, you'll be giving your family and friends bill money, and now you're in the hole right along with them. So if you're looking at considering these ETFs and other areas that I'm talking about, you'll be able to learn how to diversify your portfolio using minimal investments. Now, dividend stocks, that's another way to go. I've been talking about dividend stocks for the last couple of weeks. If you're looking for stocks that pay dividends, you want reinvesting the dividends is a great way to significantly increase your returns over time. And how does that work? Well, if you invest into a stock that gives you back 5% interest, and you take that 5% interest and you invest that 5% interest into another share of the same stock. For example, I told you guys about putting up $200 into a bank account, and then you withdraw the interest out of that bank account every year, and you take that and go and open up another bank account. Well, if you are getting 5% interest off of $200, you're probably going to get about $10, a little under $10. Well, if you're getting $10 per account, and you say you put up $2,000, you've got 10 accounts with $10 of interest in it or less, and you pull that out, you've got a little under $100. So say you got $100. You take that $100, you open you up another bank account at 5% interest. Now you have 10 accounts with $2,000 in it, and one account with $1,000 in it, and all of them getting back at least 5% interest, unless you invest in a credit union where you're getting back 7% interest. So the $100 will get you back $7 on a credit union, and the $200 will get you back 5% on a regular bank, which will give you back $10. Well, if you're doing this over time and not cashing out on the money and going to take it and go somewhere with it, you would be able to manage your investments where you would be able to put your money in a number of places where you could eventually have $100, $200, $300,000, $1 million across several banks, because there's over 8,000 financial institutions, and it's a guaranteed 5 or 7% interest after inflation. And you would have a large quantity of interest that you could really put wherever you want, or send it to Singapore, for Christ's sake. I was telling you guys about investing in offshore markets, offshore banking. That's one way to get it started. But if you're looking for stocks that pay dividends, you can buy in American stocks. And if you buy into some of the higher paying dividend stocks, which are usually identified as cash stocks, where they pay a higher level of dividends with a lower investment rate, because the company is not on a growth level. It's just continuously allowing capital to flow into the company, and it just pays out its shareholders. If you are taking the shares out of that, where you can't guarantee that they're always going to offer you like 20-30%, but you can buy in and they might offer you like 10-15% on your return, and you then hand them a $200-300 a month, and they're going to hand you back dividends every month or every quarter on your return. And then you take the dividends that they handed you, put it with the rest of the money that you were about to give them, and give them even more money. And that will increase the principal. And while it's increasing the principal, you will be able to benefit from even larger returns. And over time, and that's why I said it's everything that we're talking about is a snail's pace, because getting rich is a 10 to 20 year plan unless you know somebody who knows somebody with a Martha Stewart insight track that will get you what you need. If Martha Stewart can get you in, then that's the one. Put it here and take it out before they see you. But if that's not what's going on, you're in a position where you have got to pay attention to what you're looking for versus what you're trying to achieve. Now, one of the other things that we've been talking about lately that is very good for low investors, and I've said this a plenty of times, is getting into that crypto. And since Trump is promoting crypto right now, you might want to get into crypto when it dies back down, because it's going to die back down. People are going to keep investing in it, but it is going to die back down. The top 1% are going to withdraw their money in quarter one and spend it on stuff, and then quarter two, it's going to be at its lowest, and then people are going to start reinvesting in it in quarter three, and it's going to peak between quarter three and quarter four. And if you want to ride that little dip and get you a little $20,000-$30,000 increase, or if you're buying in small and you're looking at a 50% increase in that little dip phase, get your little 50% increase, because you don't have to put it in there and ride the wave for the full 80% annual interest rates that they try to guarantee you. You could go in there and get your 50% interest rate on Bitcoin. It doesn't change the fact that because of the volatility of Bitcoin, you could actually go in there and come out with a larger quantity of money in a shorter period of time, and then hold it. You can hold it. You can cash out and then hold it. And it'll be the foundation of when Bitcoin tanks. You'll be able to say, all right, now let's go back and go in all over again. But if you're willing to accept the higher risks for potentially higher rewards, you can consider investing in cryptocurrencies. And if you start with a reputable coin like Bitcoin and cross trade with Ethereum, you be able to maintain the volatility between the two stocks, but you also have to be prepared for the ups and downs of the volatility there. And these are going to be ways that you could take $200 and throw it in. And like I said before, if you throw $200 into Bitcoin, if you would have threw $200 into Bitcoin before they picked the president and let it ride for that week and a half, 2 weeks, you would have definitely gained 200% on your $200. Yeah, it ain't a lot. You would have put up $200 and you would have walked out with actually, no, I'm wrong. You would have gained a 50% increase, because it went from about 60,000 to about 90,000. So you would have went from about 200,000 to from $200 to about $300. But you would have made a quick return in less than 30 days. You would have made a quick return where you could have pulled that $400 out and said, I made some money off Bitcoin. And it actually would have fueled your ability to want to invest. But for the long-term investor, you have to have a strategy. You have to have a plan. So one of the other things that I've told you guys plenty of times before in the last few weeks is, if you're doing peer-to-peer lending, you have the platforms like Lending Club that allow you to lend a small amount of money to individuals or small businesses in exchange for interest payments. I told you guys something equivalent to this, where you have higher returns for these are going to be more higher returns than a traditional savings accounts, but you will have higher returns doing something like this than what you would with putting it in index 500s. But because of the volatility and the risk, you got to look at, whether or not you want to, you have the tolerance and the financial capabilities to lose out on that money, because you're putting money into the faith that somebody's going to pay you back. And if they do pay you back, then you make massive returns. But if they don't pay you back, you take it as a loss. And for those of you who've ever borrowed money from a cash advance place and never paid them back, or got a loan and didn't pay back the loan, or borrowed money from a lending establishment knowing you didn't have the money to pay it back, and even if you did find a way to make the money to get it back to them, you were one of the few people who could be trusted to lend money, but that borrower took a big risk on you. And the fact that you didn't pay back your loan and you said, screw it, charge it to my credit score, you know, that's the risk that lenders take. But the lenders that vet their borrower and lend responsibly are more successful than they fail, where they still can take losses that are tax deductible off of their gains when they're lending money. But you're going to get more returns off of lending money that's going to be more stable and non-impacted by the stock market. For example, when you're doing short-term loans, you have short-term loans that allow you to charge monthly interest rates instead of annual interest rates. So you might be charging 19 or 20% or 30% interest rates like credit cards on a large quantity of money that you lent to somebody, that turns into an annual return of 300 to 600% interest. If you loan somebody $10,000, and because of the monthly interest rates in the contract, that it's compounded monthly, they would end up owing you off of that $10,000, $30,000. They would be making payments with you for so long that you would have paid double or triple the value of the money that they originally borrowed. That's how they make their profit. So every now and again, somebody who doesn't pay, it doesn't really hurt their bottom line, because they have set up a system where, you know, if I can get this person to pay me 8 payments or 10 payments, they've given me back the principal. Now I'm just working on profit. Used car dealers do the same thing. They pick up a car out of the auction, they hold the car, put it up for sale. Somebody puts down a down payment on the car and then starts making monthly payments. After that person has crossed over the first 6 to 8 payments, they've paid off the total value of the car from the auction, and now the company has broken even. Every payment they've made after that positively impacts the credit. It positively impacts the business, but it positively impacts the credit of the person who's borrowing. So when that person decides to go back to that entity and say, I want another one, I can count on you to pay the whole deal. Whether you pay it up front or whether you make payments, I can count on you to pay the whole deal. So 2 things I can do for you. I can break you off on a chunk of change and take a bunch off of the value of the car to kind of make it more affordable for you. I can work some magic, get you one with more value. All these things can happen because they've earned your trust, so that increases their borrowing power. Banks aren't that easy to persuade, and that's why private investors and private lenders are the way to go, because banks have an underwriting department that's very strict, that prevents the banks from having as much capital losses as private lenders. But private lenders have the ability to be more financially successful because you can charge higher interest rates for more volatile borrowers. Take a risk on a surefire thing. And this is going to give you high yields. So when you're dealing with high yield savings accounts, this is another way to go. High yield savings accounts or CDs. You're probably going to see more high yield checking accounts these days over CDs and high yield savings accounts, because savings accounts are usually giving you a little bit above market average, 1 to 2%. They're not always giving you 5 and 10%. The checking accounts are giving you incentivized 5 and 10% for up to like $500 in most accounts. Some of them are $200 or $300 in the account. And the ones that are more than $500 are typically only doing it for a limited period of time as soon as you open the account. And then after that, it's going to go back down to 0.54 or 0.64%, which is less than 1% of the value of the money. And it's not really worth investing. Leaving it there once you've invested in that, you might as well just take the money out once the time period's rolled over. But why not, as a high returner, as stock or crypto, place your money into high yields accounts or certificates of deposit where you can get better interest rates than standard savings accounts with minimum risks. Certificate of deposit accounts, or CDs, are going to be ways where you could put your money into a location and leave it there for a limited period of time. It's going to be a fixed period of time. They're going to charge you penalties to take your money out early, but you will be able to put your money into that account and turn over a larger quantity of revenue, where you would be able to see yourself with a more effective and more innovative uh, portfolio. Now, there are many other investment options available, from mutual funds to index funds and even cryptocurrencies like the Bitcoin, as we've talked about earlier. And they have Black Coin. Somebody says something about Diddy Coin. I don't know why you would even have a Diddy Coin. They have U.S. currency coin. They have rainbow currency out there. So there's a lot of cryptocurrencies out there that you can look into, and some of them are growing in popularity. Not quite up there with Bitcoin, but you start looking at how Bitcoin can be cross-traded against the top 5 cryptocurrencies. When you find a coin that fluctuates inversely to Bitcoin, when Bitcoin goes down, that coin goes up, you can actually buy and sell against that particular type of currency and have even higher returns. And you'll see coming soon that we'll be talking about and working out ways for us to be able to do something like that with the cryptocurrencies and be able to make us a reasonable quantity of revenue. And eventually, I'm going to get in touch with Brett Owens, and I'm going to remind him about coming in and talking to us about his book, where we can discuss how we can invest in stocks and bonds and make that money, so that we will be able to put our money in a investment portfolio that will allow us to make guaranteed 8% even when the market is bear. But the key that you need to have for these types of endeavors is to educate yourself. You got to do the research. You got to start small. Don't be afraid to experiment and try new things. And that's how we're going to learn and grow. You also remember that instead of just throwing down on a large quantity of stuff, get into some penny stocks. Look at how the market shifts. Look at how the shares increase and fall. And if you're watching the market trends of certain stocks and you buy into a penny stocks, you might be able to buy 100 of them for $1. You might be able to buy 1,000 of them for $5. And if that stock raises 50%, yeah, you've got a 50% increase on a 15-cent stock. But if you have 5,000 of them, that's a lot of money. So buying into penny stocks can actually give you a massive quantity of portfolios of investment capital in your portfolio that you can actually take and move to larger investment shares. So I want to share with you a story, and it's about this truly inspiring individual. It's about this young woman named Deborah, and she started investing with just $1,000, and she was determined to turn her financial life around and start by investing in diversified portfolios of stocks and ETFs. So she almost made it a point to educate herself, reading the books and attending the seminars to learn more about the investing. We're going to fast forward a little bit, 5 years, and Deborah had turned her initial $1,000 investment over the course of 5 years into about $50,000. This is why I tell you guys that if you have a 20-year plan, if she turned $1,000 into $50,000, which is approximately 500%, well, 5,000% return, you're looking at over the course of 10 years, that $50,000 would have been 500,000, and over the course of 20 years, that 500,000 could have been upward of $5 to $10 million. A lot like what Warren Buffett did with Coca-Cola. What's remarkable about Deborah's story is that she didn't have a lot of money to start with, and she didn't have the financial background, but she was determined to succeed, and she took consistent action towards her goal. She's not a genius or a financial wizard. She's just an ordinary person like me and you who took control over her financial life. So, what can we learn from Deborah's story? Firstly, it's the power of starting small, and then you want to be consistent. Deborah didn't try to invest a lot of money at all in one situation. She started with what she had gradually built up her portfolio. And secondly, the importance of the education and self improvement. So as she learned how certain markets would shift, she would know when to pull out of the market and when to buy into the market, the same way I've been following Bitcoin for over a decade. And I can tell you that there's an approximation of the end of quarter one, end of quarter two, you pull out of Bitcoin and or you put into Bitcoin. And at the end of quarter three, beginning of quarter four, you pull out of Bitcoin and you're guaranteed to have the least quantity of losses versus situations where you're riding a wave to the peak and then you forget to check your stock and then that mug just plummeted 15K. You just lost a whole bunch of money there because you were there when it was at 90K. So what you could have got, you didn't get because you left it in there thinking, oh, it's going to run to 100K. Nah, these big boys, they're going to pull their money out. They're going to pull their money out for Christmas. That's going to make the value of the stock go down. They're going to put it back, though. Because any money that's invested in a stock before the end of quarter four is not going to be taxed. It's considered a financial loss. It's an investment into the company, into the business. Also, Deborah didn't rely on others to manage her investments. So she didn't just have third-party people that she paid to make the situation happen. She took the time to learn and understand the process herself. And by transforming $200 into serious wealth requiring the strategic planning, she had the discipline in investments and a focus on opportunities that could yield higher returns, which means she was always looking into better ways to make her stocks become more successful for her. Now, when you're in these particular stock markets, one of the things that I've told you guys plenty of times before, what you want to do is you want to be able to define your objectives. You want to determine what is serious wealth and what does that mean to you? Because serious wealth is an individual that's making like $75,000 a year and they don't have to work. Serious wealth could be somebody that's making $300,000 a year and they don't have to work. Serious wealth could be Donald Trump money. That's serious wealth on anybody's level. Serious wealth is Elon Musk money. But for the average individual, like, are you just trying to pull yourself out of a financial strain and then work your way into a higher scenario, or are you trying to put yourself into a different financial standard of living that would give you a lot more financial freedom? Because if that's what you're trying to do, then by all means you're going to be aiming for a higher goal. It is a certain amount of money that is reasonably considered financial independence when you're not living above your means, or the ability to invest further. Setting specific and measurable goals will guide your investment decisions. You want to be able to track your income and expenses. Before investing, ensure that you have a clear understanding of your financial situation. You want to make sure that you're not taking your rent money and rolling the dice on a stock. You want to make sure that you're not putting a bunch of effort into investing into something that is definitely going to fail. So you want to be able to identify areas where you can cut necessary expenses to free up more funds for investment. I told you guys before about emergency funds. If you consider setting aside a small portion of your funds for emergencies to avoid dipping into your investments unexpectedly, that's where I told you guys about putting your money into the checking accounts with the high interest percentages in there. Because if you have a large number of checking accounts there with, $10,000, $20,000 in it that is gaining interest for you, you can take the interest off the top and you can use that interest to add to your investment portfolio. And if you have an emergency, you can pull out of that $20,000 as opposed to cashing out early on some of your stocks. That's one of the reasons why it is important for you to have an emergency fund. You also want to have an emergency fund just because of what happened with COVID. For those of you that missed 6 months of work and you didn't have an income, if you had an emergency fund that would cover 6 to 12 months worth of unemployment, you would have a decent blanket of safety that could help you generate more revenue. On the other hand, those of you who were investing in large quantities of stocks when the stock market crashed because of COVID, you have to know how to pull your money out before the stock market crashes so that you're not losing out on all of your investment portfolio. You want to make sure that you're paying attention to what's going on. You're hearing people starting to lose their jobs. You're hearing businesses are starting to close down. If you were listening to that, you should have took your money out in the beginning and sat on it and said, let me just leave it. Let me just leave it off to the side and let the stock market do its thing. And then once the stock market hits the bottom, then I'm gonna put my money back because the only thing it's gonna do is go up from here. That's the key factors. But if you're paying attention to news and you're paying attention to politics, then the government powers that change from every 4 years, you would be able to see how the market will fluctuate. And as the market fluctuates, is as you put your money in different areas. Um, like people who were investing in wide ranges of stocks and bonds and stuff, if they were pulling all their money out of stocks and bonds and dropping all their money in gold and silver, when the market crashed, gold and silver would have been fine because gold and silver is not valued by how many businesses closed down. And then then when the market changes, you can go back into the stock market and sell your gold and silver, take the difference and go back and buy it back into the stock market at a higher value. Whatever you want to do. The reason why you have a portfolio is to move your money around so that your money is always making money for you. If you have financial literacy, invest time in learning about the personal finance and investment strategies through books, online courses, and reputable financial websites. Come talk to us. You want to be able to reach out, network, and connect with others who are knowledgeable about investing and wealth building strategies like Brett and Tim. And they can tell you all the things that you need to know. They actually have a weekly newsletter that keeps giving you guys up-to-date insight and information on uh, how to invest your stocks. This can provide valuable insight and opportunities to getting better trade deals. Regularly review your investment portfolio and financial goals. So don't just put your money in there and turn a blind eye to it. You want to put your money in there. You want to go back and check on a daily basis, which is why they call it day trading, to make sure that the stocks are looking good. You're looking at what's happened over the past 24 hours, what's it's looking like right now over the next few hours, and then you want to go on and do what you got to do. Be prepared to make adjustments based on the market conditions and personal circumstances. So when you start getting into stocks and bonds, you're not watching anime all day long. You're over there trying to get the scoop and the skinny on what's going on in business and finance. Because if the market shifts and the economy changes, then your stocks are going to change in value. So stay informed about the economic trends and pay attention to how an indirect impact on your investment could be affected by a stock market trend. Notice how when we talked about the Tesla Cybertruck, it's still a reasonable investment for Tesla to buy Tesla stock, because even though the Cybertruck hasn't lived up to its reputation, the Cyber Cab might actually live up to its reputation. They had a movie. I actually just seen it on Netflix the other day. I can't remember the name of it, but regardless of the fact is that the movie had like all cyber vehicles, looked like all Tesla vehicles were all autopilot vehicles all over this movie, and it was crazy. But the fact is that it was giving you the visual observation that nobody's going to be driving their own cars coming soon. And if you invested in a company that's going to be having driverless vehicles, passenger only vehicles, no driver, you're looking at investing in one of the major companies that is creating driverless vehicles. You heard the driverless delivery trucks that were happening during a strike. Now you're looking at driverless cabs and driverless cars that are like $30,000 a piece. There's more than one company outside of Tesla that's also doing driverless cars. So you're looking at a cornerstone. They actually have rideshare companies that have only driverless cars, and these things put you into a understanding that the market is going to shift from gas powered cars to electric cars. The market is going to shift from the need to have personal driver's licenses and stuff, because nobody's going to be driving anything. So you're looking at different changes in the laws and taxes and tickets and police department and all these other things that change. And you can tell that depending on what you're doing, the cost of tires is going to change, and all of this stuff changes. The oil is going to change, the renewable resources, non-renewable resources. So you really got to pay attention to the stock market. You got to pay attention to the economy and what is becoming the next big thing. The same way we're continuing to become the next big thing. You just got to pay attention to it and make sure that you invest in it. And while you're transforming your $200 into serious wealth, you know that this is going to be something that is a very ambitious move to have. The same way Mr. Pibbs told me that he wanted to be a millionaire before 2025 and never did anything to make that millionaire status. You have to understand that it is possible, but you have to have the right approach and the right mindset. You have to focus on high return investments. You have to consider diversifying income streams through side hustles and continuously educate yourself, but about the financial opportunities. You want to remember that building wealth typically requires time and patience, and you want to have consistent effort while the yields will give you the best results over a longer period of time instead of short results. And then one of the things that I want to leave you guys with is something to think about is what if you could turn $200 into a life-changing wealth? Is it a possibility that within your reach, you could start with taking the first step of, just investing into something small that you've done a lot of research on and you understand it's going to turn over something a little bit decent? Or if you're going to invest in something that you just know is going to be big, the way they invest in bottled water, and now everybody's got bottled water. Everybody's got 3 to 5 cases of bottled water in their house. And if they don't, they're about to go to Walmart and go buy it. So if they're going to Walmart to go buy it, walmart.com, Temu, you guys need to think about how you should be investing in some of these stocks. Like T-Mobile is doing fiber optics right now. I don't understand why you're not buying into T-Mobile stock, because, apparently, if they're bringing back the landlines, guess who's going to be cornering the market on the best network in the nation yet again? You got to think about these things. Whether you're a seasoned investor or just starting out, I hope this video is going to help you guys. I hope the podcast helps you guys the whole way through. And you guys are going to be inspired to take control of your financial lives, because as we are walking ourselves into the next generation of capitalism with 4 more years of red, we are about to deal with, if you're not making your own money, you ain't making no money. So I'd love to hear from you guys. Make sure that you guys throw some comments into the comment section and let us know, what are your investment plans and what strategies do you use to grow wealth? And don't forget to like and subscribe, hit that notification bell for me when you're looking for financial tips and advice. And definitely, guys, we're going to make sure that we keep running I got some on the back end. I got a lot of tips and tricks coming in on the back end. Either way, we'll be able to work our way through all of the things that we've got going on with our financial investments. And we also will be looking at other ways to increase big business. We just had Crestify in here yesterday, and Happy Oli, as a matter of fact, a small business owner that owned 2 companies, came up onto the show yesterday and was talking about 2 different products that he had built up from the ground up. And now he's actually selling services to other individuals. And this is a type of big business idea platform that people can get into and make themselves more successful. Ken had a different change, because Alan was here yesterday. Ken had a different change in his schedule that we weren't expecting, so he wasn't able to come to the show today. So I'm going to try to see if I can squeeze him in sometime next week, so that he can make time to be up on the show and tell us about his content writing platform, because he actually has a small business where he's taking care of content creators, scripts and writing platforms and everything to that effect. So we're going to be getting into the ins and outs of his professional writing contract company. And these gives you ideas as to what you can do and how you can do it. Because didn't I tell you guys before that freelance writing can turn into a business? Now I've got a freelance writer promoting his business. I told you guys about taking photos and images and turning it into a business. We had a web designer up in here yesterday promoting their business. The fact that you can sit on this show and you can watch, learn, and listen from me, and then a couple weeks down the line, everything that I told you that could happen does happen. You got to start stepping back and asking yourself, why is it not working that way for me? And then ask yourself to make it make sense. And with that being said, ladies and gentlemen, I definitely really appreciate you guys coming to the show today. I actually have a plethora of messages coming in right now. I'm gonna go ahead and touch base with some of these and try to make sure that the fans are doing okay. Make sure that you guys leave extra information in the comment sections as well. And I'm gonna ask you guys, as long as the situation doesn't make sense, I'm gonna keep asking you ladies to make it make sense. So ladies, make it make sense. Remember, I am live 9 Eastern, 8 Central, 5 Pacific, 7 days a week. And I will see you guys tomorrow night. Thank you for coming to This and That, where we talk about this, that, and everything in between. I'm your host, Xander. And again, I'll see you tomorrow night.